Good morning, everybody. Welcome to the Transport Sector Retirement Fund two-part system presentation. We're just going to give people still joining another 2 minutes, and then we'll get going. Okay, good morning, everyone. I think we've given people a little bit of time to get going. So I think let's kick off. My screen will move. Okay, so welcome again to the webinar. Today is the 4th of July, 2024. My name is Nazli Seegers. I am the Chief Operations Officer for SALT Employee Benefits. SALT Employee Benefits is the administrator of the Transport Sector Retirement Fund. Welcome to the fund officials who are on the call. I think the Deputy PO and the Legal and Risk Officer have joined the session, as well as to all of the employers joining us, all of the trade unions joining us, all our members, and all our stakeholders. I look forward to a very informative session. So in today's session, we'll be covering the following. What is two-pot? There's all these news articles flying around, all of this information and misinformation. Today's session is really to explain to you what the two-pot is, why the two-pot system was introduced, how it will work, what seed capital is, who qualifies for it, what the impact is of withdrawing funds, what our members should be considering, and then any questions that you have. So we'll give you some frequently asked questions, and then we'll open up for a live Q&A session. I just want to remind the audience that in these sessions, there is a chat box on Teams. So if you needed to ask something and you're worried that you're going to forget, please put it in the chat box, and then we'll respond to the question. Bianca will facilitate. Okay, so what is two-pot? So the two-pot retirement system is a reform introduced by the South African government, which enables retirement fund members to make partial withdrawals from their retirement funds before retirement. You'll recall that previously members could not withdraw from their retirement fund while their employment contract was still in force. So while they were actively still employed, they needed to contribute to the fund and they couldn't withdraw from the fund. So what the government engaged with the trade unions, with employers, with all the stakeholders, the outcome of those engagements were that we need to enable people to withdraw from the retirement fund, even if it's a smaller portion, prior to retirement. Of course, with all of the economic hardship and the financial hardships being suffered by not just our members, but South Africans in general, this was meant to provide some relief. At the same time, it safeguards the amount that remains accessible only at retirement. So what it does is even though you can withdraw 1/3 of your new contribution, so 1/3 goes into your savings pot, the other 2/3 are locked in until retirement. And what that intends to do is enhance overall retirement outcomes. So the replacement ratio in South Africa, and a replacement ratio is really, if you need 10,000 Rand to live today, what would you need at retirement age to live? Our replacement ratios in South Africa are very, very low. I think as low as only 20% of the population can actually afford to retire comfortably. So retirement savings is a challenge for us as a country. This reform intends to improve those statistics while enabling members to withdraw from a portion of their funds, for emergencies, etc. So members facing financial hardship don't have to resign from their employers. They can access a portion of their retirement benefits while their employment contract remains in force. The implementation of this reform is still planned to commence on the 1st of September 2024. Obviously, it's an election year, and the government of national unity is now being installed. So there are quite a number of bills sitting on the president's table. But as an industry, we continue to prepare as though this will go live on the 1st of September. Why the two-pot system? I think we've explained that, but it's aimed to help you save for retirement over time. We are trying to discourage members from taking out their entire retirement savings every time they change jobs, meaning that they start from ground zero every single time because they withdraw all their savings. At the same time, it gives you access to cash in cases of emergencies. So it lets you dip into your savings early if you really need to, but it's really important that as employers, as funds, as administrators, we encourage our members not to just withdraw from their savings pots. It's critical that members save for retirement. The social grant system is collapsing at this point in time. It's not very strong. Even the social grant itself, I think at this point is about 2,100 or 2,200 Rand. That's not a living wage. You can't survive on that amount of money. So we really have got to be more active to increase and improve our savings for retirement. So currently, while members are still employed, they cannot access their retirement funds. And this is what the two-pot system will be changing. So starting on the 1st of September, it will be 4 pots for a lot of members. So let's talk about the first two on the left-hand side of the screen. In 2021, there was legislation introduced, which was called the T-Day legislation or the annuitization legislation. And what that did was it changed the way that we operate provident funds. So it split it into a vested pot and a non-vested pot. So all contributions for members up to and including the 28th of February 2021 are in what's called a vested pot, meaning that your rights are vested. The right to withdraw that pot in its entirety remains vested. So you can still withdraw for members that have fund credits prior to 2021. The amount that you saved prior to 2021 can still be withdrawn on your on your exit from the fund or termination with your employer. Then the non-vested pot was introduced, which is from 1 March 2021 to 31 August. Those are all new contributions. And the non-vested pot really has got to do with contributions received after the 1st of March and up until the 31st of August this year. And the difference here is that while it's still accessible, so you can still withdraw that full amount when you leave your employer, it is at retirement, the non-vested part is split into, it's not, you've got to buy an annuity if it's over the de minimis threshold. So currently that's sitting at 165,000. So if you have, let's say, contributed 200,000, you've saved 200,000 in your non-vested pot. If you get to retirement age, that non-vested pot needs to be, you can take 1/3 in cash, similar to a pension fund, but the other 2/3 must be utilized to buy an annuity. Whereas with a vested pot at retirement, you can take the entire amount in cash. It's important to note that members that were 55 on the 1st of March 2021, so they would be around 58 now, give or take, they may only have contributions in the vested pot. So they would not have a non-vested portion. It's important to note that for transport sector in particular, the default option is into that vested pot. So members that are at this point in time 58 and older, or who were 55 as at 2021 on the 1st of March, they will not automatically get the 2 new pots, if that makes sense. The 2 new pots will be only given to them if they fill in a form or select an option on the online portal to opt in. They physically need to opt in to the new regime. Otherwise, we will be defaulting their contributions into the vested pots. For members who have fund credits, we'll be taking 10% from your vested and non-vested pots to a maximum of 30,000, and that will be moved into the savings pot at the beginning of September. So the fund credit as at the 31st of August, 10% of that proportionately from your vested and non-vested pots will be moved into the savings pot. So that would be the seed capital that members can withdraw. Then every month after that of your new contributions, 1/3 will be allocated to the savings pot, and the remaining 2/3 will be allocated to the retirement pot. So 1/3 of your new contributions will go into your savings pot. Let's say you're a member who gets a seed capital of 10,000 Rand, because that's what 10% of your vested and non-vested pots constitute. Then it would be 10,000 Rand plus, if you're contributing 1,500 Rand every month, plus 500 Rand every month. So the savings pot will continue to grow over time if you do not withdraw from it. If you withdraw from the savings pot, then of course that value will decrease, but you can build it up with your new contributions over time again. Okay, so this is an example. So we will be taking, if you have equal amounts in your vested and non-vested pots, then we will be moving that money into your, so 10% is 25,000, so it doesn't exceed the 30,000 cap, and that will be moved into your savings pot. Then, like I said, if your monthly contribution is 1,500, 500 will be allocated to your savings pot, and 1,000 will be allocated to your retirement pot. So the vested and non-vested pots will receive no further contributions for members that are under the 55 mark. We'll deal with the over 55 members in a later slide. So for everybody that is automatically enrolled into the 2-pot system, they will see no further contributions into their vested and non-vested pots. Those pots remain invested by the fund, meaning that they'll continue to grow. The vested rights remain for future resignations or transfers to preservation funds, and they can withdraw from these pots upon resignation or retirement. Your savings pot is accessible anytime. It's after the 1st of September, of course. The minimum withdrawal amount, so you'll need to have a minimum of 2,000 Rand in your savings pot. You're allowed 1 withdrawal per tax year. The fund is not restricting its members to windows, so you don't only have between September and December to withdraw, for example. The member can withdraw at any time during the year that he experiences the need to withdraw from the savings pot. It is important to note that this withdrawal from the savings pot will be taxed at the individual's marginal tax rate. So it is subject to tax, and there's no maximum withdrawal limit, meaning if you have 10,000 Rand in the pot, you can withdraw the 10,000 Rand. If you have 100,000 Rand in the savings pot, you can withdraw the 100,000 Rand. The only caveat is it's subject to tax and fees, and that it is only allowed once per tax year. The retirement pot is accessible only at retirement. It's preserved until retirement, and it cannot be accessed upon resignation. And like I said, 2/3 of contributions goes into that pot. So starting on the 1st of September, for members who are enrolled into the 2-pot system, the retirement pot will start off on a 0 balance. And as we allocate contributions, that pot will start to build up. Members do, however, have the option to transfer from the vested and non-vested pots into the retirement pot, but they can't change their minds later and say, oh, they didn't intend to do that. Once that transfer is done, it's done. Okay, so we've discussed seed capital. If the member has a fund credit of 100,000, then it will be a seed capital of 10,000, 200,000, 20,000. So it's 10%. Any member that has a combined vested and non-vested pot which exceeds 300,000 will be capped at the 30,000 mark. Okay, so all withdrawals rules apply on the vested and non-vested parts. If you leave your employer, you can only withdraw from the savings pot after the 1st of September 2024. You can also only withdraw from the savings pot once a year. So if you terminate your employment and you're exiting the fund, what will happen is we'll look at the value in your savings pot. If it's less than 2,000, then the legislation allows you to add that to your vested and non-vested pots and withdraw it when you leave the employer. If it's more than 2,000, then it's kept in the fund. It can be added to your retirement pot that stays there or is transferred to a new fund, or you can come in the next tax year to withdraw. There's no withdrawal from the retirement pot at any stage. Okay, so the over 55s, the transition will not be automatic for over 55s. It's automatic for all of the members that are under 55 as at the 1st of March 2021. So members over 55 as at March 2021 who are approximately 58 at this point in time, but have not reached retirement age, obviously, they do have the option to opt in, and they have 12 months to make that choice. So they have from the 1st of September 2024 until the 31st of August 2025 to opt in and say that they would like to have a savings and a retirement pot. It is critical to note that once they elect to join the two-pot system, this decision cannot be reversed. So they will always have 1/3 to savings and 2/3 to the retirement pot. The opt-in form will be made available in due course via the fund communication. So impact of withdrawing from the savings pot, they'll be taxed as part of the member's taxable income based on their marginal tax rate. So you'll pay tax on that. We really are encouraging employers to encourage members to not withdraw from the savings pot unnecessarily. You know, if they can keep it for genuine emergencies rather than because they're having a birthday party or a let me not give examples because some of us think that emergencies are different. All our emergencies are different, right? So let's say, you know, they must be withheld for genuine emergencies. All withdrawals will be subject to potentially a withdrawal fee and tax deductions. So it's important for employees to know, it's important for members to know that it's the benefit. So let's use 2,000 Rand as an example. Minus tax, let's use a marginal tax rate of 18-20%. So that's minus 400 Rand for tax. And then let's say there's 100 Rand withdrawal fee. So that's 500 Rand. So the net value that the member gets will be 1,500, not the 2,000 Rand that he's withdrawing. So you'll see how he's already lost money to tax and fees just by withdrawing from the savings pot. Okay, so carefully consider your options and seek advice from an accredited financial advisor before withdrawing from the savings pot. Save as much as you can when you can. They say make hay while the sun shines. So we don't know how long we're able to work for. And we hope that our members make sober decisions in terms of the savings pot. If you wait to withdraw the money from the savings pot until retirement, it will be treated with retirement tax tables, meaning that you will attract less tax and you would obviously have gained more interest on your savings. It's important to encourage members to prioritize their retirement savings, avoiding actions that may impact on their ability to have a good replacement value. So to prepare for withdrawals, we're asking that all members register on the member portal. It is critical for members to be registered. That will be how claims will be received on two-pot. We've put the WhatsApp number on the slides for the employers. All slides will be sent or circulated after the session today to all participants in the session. It's also very important for employers and members to understand that tax registration is critical. Thus, the two-pot system is subject to tax directives being applied for, meaning that if we don't have a tax number, a valid active tax number for the member, we won't be able to pay the two-pot claim or the savings pot claim. Registering on the member portal is critical for submission of claim forms. All savings spot withdrawals will be lodged through the TSRF member portal. You'll see we've put the number on the screen, 0872407004. Members will be able to engage us there to lodge savings spot claims. And for any general queries on two-pot. So again, just the savings pot should only be accessed in cases of emergency. It's not use it or lose it. It's very important to understand that it will continue to grow. Withdrawals done before retirement may be subject to tax deductions. We've said that many times now. I think we've belabored the point. And the implementation date remains as at 1 September 2024, unless the President does not sign the bill in time. So how often can you withdraw from your savings pot? Members will be allowed one withdrawal per tax year. When will it be taxed? When they withdraw the funds, it will be taxed at their marginal tax rate, and it will be taxed before we pay them the benefit. Minimum withdrawal amount is 2,000, and it's not a loan. We've had some questions from members asking if it's a loan against their money. It's not a loan. You're actually withdrawing money from your savings pot, meaning that where you may have had 10,000 Rand as a benefit before, you're now taking out 5,000 Rand. So you're reducing your asset, your savings. It's not a loan from the fund. Is there a maximum withdrawal amount? No. Members can withdraw the full balance from their savings pot. And will they be able to withdraw their vested pots when they resign? Yes. Current fund rules apply. And that those pots are also subject to tax when they withdraw. Can I take my retirement pot in cash when I resign? No, we are not able to take our retirement pots in cash. Those can be transferred to the new employer's fund or retained in this fund. Alternatively, it can go to a preservation fund, but it cannot be accessed. Okay, I think we are now ready to open up for any questions that there may be. Bianca, do we have anything in the chat boxes? Any hands?
Yes, absolutely. Thank you, Nes, for that informative session. I do have a question from Don, and he is asking if the tax is done by the employer or the fund.
Thank you for the question. The tax is definitely done by the fund. So the administrator will apply for tax. It will be the same as when members put in a withdrawal form now. The fund and its administrator process those claims.
Great. Thank you. Second one is from Types Phillips. Can an employee request to transfer funds from the savings to the retirement pot? Do the two pots gain the same growth?
So absolutely, they can transfer from the savings to the retirement pot. At this point, the strategy of the fund is absolutely that the two pots will have the same growth. They haven't changed strategies there. We're looking at experience before we do that. For right now, yes, we are applying the same unit prices, so it's the same growth. And yes, you can transfer from savings to retirement, but it's important to note that if you transfer from savings to retirement, you cannot reverse that transfer, meaning that if you have an emergency later on in the next couple of years, you can't ask us to reverse the transfer that was done to the retirement pot.
Great, understood, Nes. Thank you. And just a note that we will circulate these presentation slides together with the recording of the webinars to everyone who attended the session. So yeah, and then the next question is, if I resign and I'm not employed, can I access my retirement fund? I assume the retirement pot. Maybe we can clarify on that.
Sure. So the answer there is you can access your vested and non-vested pots. If you haven't withdrawn in the year or your savings pot is under 2,000, then yes, you can access your savings pot, but you cannot access your retirement pot. No.
Okay, great. For the first year, is there a limit to withdrawal?
You can withdraw whatever's in the savings pot. So if you have, let's say you have a fund credit of 100,000 and we transfer 10,000 because that's 10% and it's under the maximum, and you add, let's say 500 Rand every month. So you've added 6,000 for the year. If you get to the end of the year and you want to withdraw the full 16,000, then you're more than able to do that.
Great. Just a quick one for those whose hands are up. I will definitely get to you. I do have you under my attention. I just want to clear the chat box, then I'll get to those whose hands are up. The next question for you, Nes, again, it says, what will happen if I don't want to be employed anymore? Will I still access my retirement funds?
If you don't want to be employed anymore, you're
yes.
able to, I think it's a duplication of the question above, you're able to withdraw your vested, non-vested if you have amounts in those spots. And it's important to note that some members may not have vested or non-vested. If the member, for example, only started in 2022, they won't have a vested pot, they'll only have a non-vested pot. If the member only started in 2024, let's say they start on the 1st of September, there's no vested or non-vested pots, then they have access to the savings pot. So it depends on what you've got which pots you have available or what the values are within those pots. But under no circumstances will you be able to withdraw from your retirement pot. Your vested, non-vested, and savings pot are accessible.
Great. A very interesting question from Shane says, if I have no contributions in my vested pot, will they take 5% or 10% from my non-vested pot? I assume this is for the seeding capital.
Yes, thank you. Thank you for the question, Shane. It will be 10% of the non-vested pot. So we first look at the vested pot to see if there's money in there. If there is no money in there, we look at the non-vested pot and we'll take 10% of that to a maximum of 50,000.
Thank you. What happens to the retirement fund if a member is deceased?
Thank you very much for the question. So we will bulk the fund credit and that will be added to the sum assured, assuming the person died in service, and that will be distributed according to Section 37C by the trustees.
Right. Next question. Employee has to handle his own withdrawal application. Any paperwork required from the employer side?
Employers will be very happy to know that no, this is a direct a transaction between the fund and the member. So the member is able to, via the online portal, those numbers we put on the presentation, the member is able to do this withdrawal without any assistance from the employer. It's a one-on-one engagement because he's accessing his own funds. Remember, with exits from the fund, what we need from the employer is confirmation that the member is terminating his relationship with them so that the fund can pay the benefit. In this case, there is no termination of that relationship, so no confirmation is required. The member is accessing a pot that he has available.
Right. How does a member view how much they have in their savings pot?
So it's not up currently. Remember that we'll only be seeding as at the fund credit on the 31st of August. But the WhatsApp number that we showed you earlier, that's the member portal. From the first week in September, once we've seeded the members' savings spots, they will then be able to see what values they have available. And there will be communication from the fund showing you what those spots will look like and how to read that screen in the member portal.
Great. I see Kaylee's question has been answered in terms of any action that is needed from the employees.
I just want to add to what Kaylee is asking. So while we understand and that employers don't necessarily have to do anything on these claims, we are planning to make an employer view available because especially in this industry where members travel. I mean, you have drivers that do long distance and are away for long periods of time. We understand that the employer may need assistance or may need to assist their members to lodge these claims. So I think in the next session, we'll show you what that system looks like and get you enrolled for those employers that want to help their members. It's absolutely not your responsibility, but for employers that want to help their members, we are making systems available for them to assist their members.
Right, thanks. How will the member access his funds on retirement? For example, if he leaves the company he works for and at retirement, does the member claim the investment?
So if the member, how will the member access his funds on retirement? At retirement, he will complete a claim form with this fund to say that he has a fund credit here and he'd like to withdraw, he'd like to retire from the fund. So I think the question is asking if he leaves the company he works for and leaves the money in this fund and comes back at retirement, can he claim the money? Absolutely. So if he leaves the retirement pot with the transport sector retirement fund and decides that he's going to leave it here until retirement stage, then at retirement, he'll complete the retirement claim form and we'll pay him out the benefit plus all the investment growth that he has earned.
Great. The next question, perhaps it will require you to go back to the slides where we were showing the non-vested and the vested pot, because there's an attendee who would want you to re-elaborate the difference between the two pots, the vested and the non-vested.
Okay, is my screen moved?
Yes, it's moving. I think maybe the previous one where, yes, this one.
Okay.
Yeah.
So the vested pot holds all contributions. So let's say the member joined the retirement fund in 2010. All contributions of his from 2010 to the 28th of February 2021 are kept in the vested pot. What vested means is his right to withdraw from that pot in complete cash is vested. So he is able to take whatever that amount is in the vested pot. When he terminates his relationship with the fund, when he exits the fund, he can take that money in cash. The non-vested part are contributions from the 1st of March 2021 to the 31st of August 2024. And in this part, the difference comes at retirement. So while he can still exit and take the full benefit in cash, at retirement for this part here, he is not allowed to take the full benefit in cash if he was under the age of 55 on the 1st of March. He must buy an annuity with it if it's over 165,000. So let's say the member has 200,000 in this pot and he's got 50,000 in this pot. Then he can take the entire benefit in cash, and at retirement, he can still take the whole 200,000 in cash here and he can take the 50,000 here because it's under the 165,000. If, however, the non-vested pot is, let's say, 500,000 and the vested pot is 100,000, he can take the vested pot in cash at retirement, but non-vested, he'll need to use 1/3. He can take 1/3 in cash, or he can take the whole benefit and buy an annuity. He must use at least 2/3 of the non-vested pot to buy an annuity. So similar to a pension fund, where it's 1/3 in cash and 2/3 to buy an annuity. An annuity pays you basically a monthly amount that you can live off. Hopefully that clarifies that question.
Thanks, Nils. What proof must be provided for the claim to be approved to prove the emergency?
At this point, we're not calling for proof of emergency. The members we are asking members to indicate what type of emergency it is, and the fund will finalize those forms in the next couple of weeks. But is it a educational emergency? Is it a mechanical emergency? Is it a death in the family, etc.? So, and that's for tracking purposes. It's not a must for the member to tell us what kind of emergency it is. So there's no proof that must be provided for the emergency.
Great. Can a person make an additional payment to the fund?
Absolutely. Additional voluntary contributions are made by a lot of members on TSRF, so that people can absolutely make additional payments into the fund.
Okay. One attendee missed your response on the question if the tax, on whether the tax is done by the employer or the fund. So they just want you to repeat on that.
Sure, the fund. So, like I said, the member can claim directly through the member portal with the fund. There needs to be no engagement with the employer. The fund will apply for the tax directive, deduct the relevant fees, and pay the money into the member's bank account.
Great. How long will it take to pay out if I put my withdrawal on the 1st of September?
So in terms of timelines, we haven't concluded our contracts with the fund as yet. And so we will give that out in communication in the weeks to come. I think we want to engage the client first. So the fund will confirm that in its communication in the next couple of weeks.
Great. What happens to members who don't have access to cell phones or the portals? Will they be able to just walk in our working centers to get the help?
Absolutely. Our working centers will be fully equipped and the portals will be up in the walk-in centers with agents there ready to assist. So absolutely. Bianca?
Yes, Ness. Yes, Ness.
Karen is making too much noise in the background.
Let me shift the office.
Okay. So sorry, I was answering don't have access. Walk-in centers are available in Bram, in Cape Town, and in Durban. We've got 3 walk-in centers in the regions, and so absolutely members can utilize our walk-in centers to assist. Okay, I'll deal with the rest of the questions. That's just a note. Does the employer add the members on the portal for the two-part system? Note, Timaine, the contribution schedules that you sent in will automatically be used to allocate members under 55 as at 1 March 2021. So the members that are automatically enrolled into the two-part system, the administrator will do the work to auto-enroll them into the two-part system. There's no work for the employer. Termination of employment, what notice do employers need to give the fund? Still the withdrawal form. That's correct, but there'll be changes on the withdrawal form because we will need the member to indicate whether you'll be transferring the retirement pot or saving or keeping it where it is. Also, we'll need the member to engage us on the savings pot. If it's under 2,000, he can withdraw it. If it's over 2,000, we'll need to let him know that it needs to stay where it is. And he'll also need to tell us what he wants to do with his vested and non-vested pots. So it's not this, it's still a withdrawal form, yes, but it won't be the same withdrawal form. The next question is, currently members have the option to retire at the age of 55. Will this still be applicable? Absolutely, it is still applicable. Early retirement is still applicable. Next question, can I withdraw my entire retirement fund before the two-pot system is implemented? Well, if you have a vested and non-vested pot, absolutely, but we don't recommend it. We say that members, there's nothing to be scared of. So remember, it's all the new contributions are going to be put into the savings and retirement pots. We're not locking up your vested and your non-vested benefits. So in any case, your retirement pot would only be made up of the new contributions. Your vested rights remain in terms of the vested and non-vested pots. So there's no reason to withdraw before the two-pot system is implemented because you still have access at whichever time you exit the fund to the vested and non-vested portions. Next question, if employee leaves employment in the transport industry and later retires from work in another sector, how does he then get his retirement pots funds? Is there an age limit or does he have to present proof of retirement? So retirement is anywhere from age 55. It's age driven, so it is dependent on your age. You can apply for early retirement from age 55. If the person leaves employment in the transport industry and he moves to the mining industry, he has the option to transfer his benefit to that fund. And when they do the Section 14 transfer, he'll indicate savings to savings, retirement to retirement, vested to retirement, vested to vested, however he wants to transfer the pots that he has. If he elects to leave the benefits in the current fund, then at retirement, he will complete a withdrawal form or retirement withdrawal form with this fund, and we will process his benefit. While the benefit remains with us, it remains invested for the member. Next question, should the employee resign after 1 September? Will they? Yeah. Yes. Members will still be able to withdraw from their vested and non-vested parts after the 1st of September. Next question, will balances be given through that is invested and non-vested parts after the transfer? The answer is yes. We will be splitting. We need to tell members how much money they have in each pot. That will be available on that portal that we showed you. Also, members can come into our offices and we'll be able to give them that information, alternatively via our various communication platforms. Do members receive a tax rebate on contributions as with a retirement annuity? I'm not a tax specialist, but I do believe that there are rebates for contributing to provident funds depending on how the employer's payroll is set up. So I think that's really a question for how the payroll is set up. Does the fund assist members to find an annuity? Yes, the fund has identified annuity providers. You do have the option to find your own annuity provider as a member, but there are options that are provided by the fund. So the vested and non-vested pots will always remain. They'll remain as long as you have a value in them. Remember, I said if you only join the fund on the 1st of September 2024, you won't have a vested and non-vested pot. You will only have a savings and retirement pot, whereas a member that joined the fund in 2010 and has never left will have all 4 pots. You'll have vested, non-vested, and if he opts in, he will have savings and retirement. Alternatively, if he doesn't opt in, he will only have vested and non-vested. So it really is particular to to the member that we have at that point in time. Yes. So if he joined 20 years ago and he opts in and he was over 55 at the on the 1st of March 2021, you'll have two pots. You'll have vested and non-vested, right? If he opts in to the two-pot system, we'll add an additional two pots. So you'll then have savings and retirement. But he's vested and non-vested pot. Okay, he was under 55 on the date. So then he will have vested, non-vested, savings, and retirement. He'll have all four pots.
Great. We do have Roderick, whose hand is up. Roderick, if you can please unmute yourself. I have unmuted you from my end. If you can just unmute yourself and then go ahead and pose a question.
My question is on this report.
I can't hear Roderick. I don't know if you can
Hi,
hear him.
Roderick. Yeah, I'm also struggling to hear him. He sounds very faint. Roderick, maybe if you can come closer to your microphone or speak a little bit louder, we can hardly hear you.
Okay, my question on this for.
It's still the same on my end.
Can you hear me?
Nes, how is it on your end?
I can't hear Roderick, unfortunately.
We can't hear a thing.
Can I just write on the chat?
Yes,
Yeah,
please,
maybe
please.
Yes, on the
You
chat.
may.
While he's
while we
doing
wait
that, Bianca, quickly, I see
Yes.
there were two questions in the Q&A.
Yes.
One from, I think it's Madery. If you make additional payment into the fund, can you choose to which part it is paid? Is interest earned on savings as well as retirement? If so, how much interest is earned? So ABCs into the fund, I think, and Penny is here. Penny, we didn't stipulate, right, that ABCs need to go into whichever pot. So we'll do an equal split between savings and retirement.
Correct, yeah. So
Yes.
it will get equally split, yeah.
Yes. So it will be split between savings and retirement. That will be the default option. And then interest is earned on savings as well as retirement. Yes, the entire fund portfolio is invested in the market. Whatever returns are earned are applied to the portfolios. How much interest is earned, that depends on the period. We're very happy to give you our returns in a separate session if you'll just request it from Bianca. Then the last question in the Q&A is, what happens if, for an example, I'm 40 years old now, I resigned and not get employed? When will I get my retirement? Well, if you're 40 years old now and you resign before two-pot comes in, then you'll be paid your vested and non-vested benefits, and that will be the end of it. There won't be a retirement pot. If you are 40, let's say next year this time, and you've got a savings and retirement pot as well as vested and non-vested, and you resign, we'll pay you the vested and non-vested, but the savings will be withdrawable once in a tax year, and the retirement pot will stay until retirement unless you transfer it to a preservation fund. We had another hand, Bianca. Shall we take that before I answer the new questions?
I think so, yes. We have Vugela. Vugela, if you can please unmute yourself. Vugela. Vugela, if you can please unmute your mic from your end.
Okay, while Vugela is trying to unmute, there's a new question from Hester. If older person opts in for new system, will his money decrease in any way? No, ma'am. It will not decrease. If the older person opts in, I'm assuming you're saying the over 55s or the over 58s at this point in time, they will just have the two new pots. The money will still be invested. It will still grow. It will still be available to them. So it won't decrease. Is it optional to be in a two-pot system if you are registered in 2014? It's only optional if you were over 55 as at the 1st of March. So you should be 58 or older at this point in time. It's optional for you. If you're anywhere under 58 at this point in time or under 55 at this point in time, then it's not an option. You will be auto-enrolled into the two-pot system. Remember, if you don't want to have contributions in your savings pot, you can always transfer that to the retirement pot, but the retirement pot does exist. Add contributions must be through employer and payroll or so directly by the employee to the fund. Okay. Additional contributions, the question is, must they be through the employer and payroll or directly by the employee to the fund? The additional contributions must be paid through the employer and the payroll to the fund. Remember, the fund has a relationship with the employer and the employer has a relationship with the employee. We don't accept direct deposits from members. Then the next question is, money that is already on my profit and provident fund now, will I be able to get it after resigning? Yes, sir. Whatever your balance is at the 31st of August, your vested and non-vested pots, you will be able to get that after you resign. What is maximum withdrawal per tax year? The maximum withdrawal per tax year is whatever is in your savings pot, subject to the marginal tax rate and the applicable fees. So whatever's in your savings pot. What happens where a member dies? Again, where a member dies, we have got to add the fund credit that's available in the pots to an insured benefit, assuming he dies while in service, and the trustees will distribute that via Section 37C of the Pension Funds Act. Another death question. In the event of the death of the member, will all funds be paid out to the beneficiaries? That's correct. It will be distributed by the trustees in line with Section 37C. If a member chooses to contribute an additional voluntary contribution, can they choose which pot the contribution should be allocated to? The default option there will be that we will split it between the savings and retirement pots. Will the withdrawal fee depend on the amount being withdrawn? The fund is in consultation with the administrator at this point in time. Once those fees have been decided and agreed upon, those will be communicated via the fund's communication platforms. Our audio options are not controllable, Mr. Smith. Yes, sir. You've got to raise your hand and then Bianca will take you off mute on our side. And then you can take yourself off mute once she allows. So if you put your hand up, she will allow you to come off mute. Is it compulsory that all employees are on the two-pot? Yes, ma'am. All employees that are employed by you and actively contributing from the 1st of September and are under the age of 55 as at the 1st of March 2021 will be automatically enrolled into the two-pot system. Those over 55 or over 58 at this point in time will be exempted. Penny says I'm talking too fast. Sorry, Penny. So how transfers are done from the savings pot to the retirement pot, the process to be taken. The portal, the member portal will allow the member to make those transfers. So the member will be able to go in and move the money from the savings pot to the retirement pot, but there will be more communication coming out on that. Will the WhatsApp portal allow employees to submit withdrawals? Yes, they will. It will allow employees. That's the preferred way of withdrawals from the savings pot being done. Okay. So this two-pot system will happen automatically then. Yes, sir. What happens if a member is on disability? Well, Transport Sector Retirement Fund doesn't have I'm trying to think now. We have capital disability on transport sector, meaning if a member is disabled, then it's similar to a death claim. The Board of Trustees will need to get the medical evidence. We will add the sum assured if the disability is approved, and we will pay the member 1/3 if he wishes, and the other 2/3 will be paid into an annuity. So it's the same proportions. If it exceeds the 165,000, the member will be able to access 1/3 of the benefit and 2/3 will be paid to an annuity. Are there any changes or additions to be done on the payroll system when the two-pot comes into effect? No, ma'am. The changes are being done on the administration also, sorry. Those changes are being done on the administration platform. Your schedules won't change at all. The presentation slides will be distributed to everybody, I think, in the next day or so, Themba.
Great. Nance, maybe if I can jump in, I have 3 people whose hands are up. We can start with Sandy. Sandy, I have unmuted you from my end. If you could please do the same on your end.
Hi, thank you very much. My question is just for clarity for the first year and the second year, what amounts are going to be in the savings pot. So my understanding is the first year, it's 5% of what is in their vested pot. If they have no money in their vested pot, it'll be 10% of their non-vested pot. Is that right?
So let me clarify, and I think our
Yeah.
slides are incorrect, so we'll fix them before we send them out. It's
Okay.
10% of whatever's in the, so let's say they have a vested, they don't have a vested pot, right? So they've only got a non-vested pot. Then it's 10% of whatever's in there to a maximum of 30,000.
Yeah.
Again, if they have both pots, it's 10% of whatever the value is to a maximum of 30,000. So it's 10% of their total fund credit on the 31st
Okay.
of August to a maximum of 30,000, right? That happens on the 1st of September or just
September.
after the 1st of September. Then remember, at the end of September, you're contributing again. So then if it were, let's say we seeded 30,000, then we add the next 500. So then it's 30,500. Then in October, we add another 500. Then it's 31,000, if I'm making sense. So it continues to grow all the time. Until they withdraw, of course, that will reduce the pot, but they can only withdraw once in a tax year. And a tax year runs from the 1st of March to the 28th of February.
Okay. So if they take their maximum amount in the first year, they will then only be able to take out a third of what their contribution is for that following year. That third, so say for instance, their contribution is 500 Rand a month, it'll be 500 Rand multiplied by 12 months. Oh, sorry, a third of a third of, so say their third is 500 Rand multiplied by the 12 months. So they'll have another 6,000 Rand in their savings pot that they'll be able to take out the following year.
Yes.
Because a third would have gone to the savings pot and 2/3 would have gone to the retirement pot.
That's right. That's
Okay.
right. So,
Right.
and they need a minimum of 2,000 before they can withdraw. So they don't have to wait for the whole year. So let's use a practical example. Let's say the person withdraws on the 15th of September this year. And they take, let's say they had a seed capital of 15,000 and they took the entire 15,000. So they're starting from ground zero again.
Yeah.
So every month will be 500 Rand. And let's say they get to March next year and they've got 3,000 Rand in the pot. They can withdraw the 3,000. They don't have to wait until October or September next year. They can withdraw in March because the new tax year is kicked in.
Okay. Perfect. Totally understand. Thank you very much.
You're very welcome.
Thank you. I have Casey. Casey, if you can unmute yourself as well. While we wait for Casey, we can try Sipho. Sipho, if you can unmute your mic from your end.
Hello, ma'am. Hello.
Hi, Sipho. Hi, Sipho. Yes, we can hear you.
No, I think it's Casey.
Is it Casey? Hi, Casey.
Yes.
You may go ahead and pose a question. Hi.
Okay.
Yeah, there is a Casey and a Sipho.
Okay, I struggled to unmute.
Okay, all right.
Can I continue?
Yes, please. Thank you.
Okay. Okay, it's Casey. Thank you very much, ma'am. I joined very late because of difficulties to join, but I'm not sure if this question was answered, but I think it's important for me to understand. There is a growing fear among members when we talk about this two-pot system. I just want a clarity. Will or in the money that will be in the invested and non-invested pots continue to generate interest, or simultaneously with the savings and retirement pots, or what's going to happen? I think we just need to clarify on that, if whether or not will the non-vested and vested pots continue to generate interest. Oh, that's a question. Thanks.
Thank you, Casey. Yes, they will continue to be invested in markets, so they will continue to earn fund return.
We can move on to Enze. Okay, so if you can unmute yourself as well. Geze, MTWU.
Hello,
Hi, Geze, hi.
people.
Sipo, yes, I see still Sipo. Yes, Sipo, you may go ahead and pose your question.
Yeah, maybe the clarity between this one third, the one for two-pot system and the one for the provident fund that was signed on the on the 1st of March 2021. What's the difference? If maybe I take my retirement, will I be, if I'm under 55, I'm still maybe subjected to take that one third, and then the rest will remain in the retirement. So I just want the clarity between the two. Hello.
Yeah, I'm trying to understand the question. So you're asking as at the 1st of March 2021, sir?
Yeah, it was said that if you are less than 55, then your provident fund will take one third of it. But now there comes another one third of this two-pot system. Is that first one still going to work when maybe I retire before, if I was less than 55 by then? Is it still going to be applicable on the provident fund that is remaining in the retirement fund? Meaning,
Yeah.
if I go home, I'll still take one third and then leave the rest as a retirement fund.
Yes, so that will still happen. So if you were 55, can you see my screen with the vested and non-vested parts?
Yes.
Right. At retirement, let's assume you have values in both, right?
Yes.
The vested part so this is the 1 March 2021 date. The vested part, you will be able to withdraw in cash, even at retirement, because your rights are vested there, right?
Yes.
So your ability to withdraw that benefit in cash, like provident funds used to do, remains vested. The non-vested part, it's got to do with rights. So your non-vested part, that right has been taken away for the money in this pot. So this is all contributions from the 1st of March 2021 to the 31st of August 2024, right? This pot here, at retirement, when you retire, you'll need to use one third of it to buy in cash. You can get it in cash, but you'll need to use 2/3 of it to buy an annuity. Now you can use the whole pot, the whole 100% to buy an annuity, right? But you have the opportunity to use 10% of it. Sorry, one third of it to take it in cash. So that's the difference. The vested pot you can take completely in cash. So if there's 100 Rand here, you take the full 100 Rand. But here, if there's 150 Rand, you can only take 50. The other 100, you need to use that to buy an annuity. Have I answered that part of your question?
Yeah, and then also maybe do you have any information regarding the annuity? Is it between maybe life, or maybe you are not, or maybe the insurance broker? Is the insurance broker's job to do that?
No. So the fund does have annuity options. What we'll do is we will send out the annuity options of the fund, the communication on that with the presentation that we send out today so that you have that available. Okay.
I'm fine.
Great. Thank you. We can try Madiba. Madiba, if you can unmute yourself as well. Okay, we can try Nkeze. One more time, Nkeze, if you can try and unmute yourself.
Hi, ma'am.
Madiba. Hi, Madiba.
How are
yes,
you?
hi. Good, thanks. And
Yes,
yourself?
Yes. Just on the first question that I want to ask, I just want to know exactly how many offices around South Africa for salt. And my second question is that, okay, how can salt help the other employees that are the part of salt that are in the rural areas where they can it's difficult to do the walk in to the office of salt if they've got a problems. I thank you.
Thank you. So the question was twofold. The first part of the question, the fund has walk-in centers in Johannesburg, in Braamfontein, in Durban Central, and in Cape Town. We can send that out with the presentation after the session. Alternatively, it is available on the fund's website. To the second question with accessibility for members, in the presentation, we gave you the WhatsApp portal numbers. Members absolutely don't need to travel into walk-in centers if they're not able to. If they send their ID number to 0872407004, they can register with the portal. So just send a hi, and then it will take you through the process. And then even the members in the rural areas, we can assist via the chat.
Okay, ma'am. Because actually, what I've experienced, there was a bus that was sent in Richards Bay for the past week. It started on the last it was on Sunday last. Then he finished this Sunday. I did visit that bus. Actually, that bus was helpful to those people that were around here that are undersold. I'm appealing that if the company Salt can promote that these buses can move everywhere, because if you go there, it's like you are at the office. You can get help the way you want. If you got some questions, those people that can help you with any ways. Because I saw that these people, some of the people, they were struggling to get help because the office is in Durban. When you're moving here from here to Durban, I think it's costing 300 and something, which means you must have 600 rand to go to Durban and come back. But if Salt can circulate those buses in these areas, then I think those people, they can get a much helper than go straight to Durban. And those other people, they're not familiar how to use the WhatsApp and then the other mechanism that the Salt said the people they must use.
Thank you, sir. Yes, our mobile vans travel in the rural areas in KZN, in the wherever Salt doesn't have offices. So I'm glad that they were able to assist, and we will
100%, ma'am.
engage. Thank you, sir. We will engage the communications strategy in terms of how we communicate when the vans are going to be in which areas.
And then, Mama, let me say, if you got that schedules, can you please send it even or on the union's website together with the employees, where you can know that, okay, let me say Facebook or something, where they know exactly those people that this bus on this date to this date, they will be on this site, so that if it's closer to those people, they can just travel to get help on that place.
Sure. We will do that. So we'll engage the PO office.
Thank you very much.
Thank you. I think all those whose hands were up, we have addressed them. Maybe we can go back to the chat box, Nes.
Sure, thank you. So the presentation slides will be distributed. That's where we ended off. So if members older than 55 to 58, they need to opt in on the portal if they want to use the system. That's correct. On the portal or via our walk-in centers, employers can also assist if they need to. I don't think our employees have registered on the platform system. Please advise on the procedure to register. So you'll see on the screen right now, there is the WhatsApp number. They literally just send a hi to 0872407004, and the system will take them through the prompts to register. So again, it's 0872407004, but it will be on the presentation slides that we circulate. Next question, if there is a court order for money, can this court order remove money from the retirement pots? Yes, sir, or ma'am. The court orders, depending on what it is that they stipulate, can remove money from any pot. What can the member register? When can the member register on the WhatsApp portal? The WhatsApp portal is already up and running. They can see their current fund credit, they can see their benefits, etc. So they can register immediately on the WhatsApp portal. Next question. So my yearly contribution get distributed to those 4 pots? No, your contributions from the 1st of September will be allocated to the savings and retirement pots if you're under 55 on the 1st of March 2021. Alternatively, if you're in the over 55s club, then your contributions will be defaulted to the vested pots, and you won't have a savings and retirement pot. So it depends on what your age is and which pots you have available. All new contributions from the 1st of September will be split 1/3, 2/3, 1/3 into the savings pot and 2/3 into the retirement pot. Are the funds in both the pots invested separately or as a whole? They are invested as a whole, Cecile. Do employees have to handle their own withdrawal application? Am I going through the same questions? So we answered this earlier. They can do it through the portal and they can do it on their own. They do not need assistance or confirmation from the employer. How do you check if you have available funds that you can access? You can log on to this WhatsApp and they'll tell you what your current fund credit is. Savings balances will only be available after we've seeded. That will be the first week of September 2024. So currently you can't see what's available in your savings pot because we haven't done the seeding. The seeding requires us to use the fund credit as at the 31st of August. That process will run from the 1st of September. So only then can you check your savings balances. But if you want to see what your total share of fund is currently, that is available on the portal on the screen. So currently the seed capital is split 50% with both vested and non-vested pot. It's split proportionately between the vested and non-vested pots. So the maximum is 30,000 and we will take money out of both vested and non-vested pots to a maximum of 30,000. In the first tax year, can I withdraw all my balance? For example, if I have 200,000 after opting in, can I withdraw the remaining balance at a go? The first tax year. 200,000 after opting in. So if you have 200,000, I'm assuming that means in the savings pot. Yes, if you have 200,000 in the savings pot, you can withdraw the full 200,000. If you don't have 200,000 in the savings pot, you can't withdraw from the retirement pot. So you can only withdraw what's available in the pot, and there's no maximum. What happens to members that their money is not invested at SALT? For example, those that the company has invested in CEDA. Temba, I can't answer that question. I think you'd have to ask CEDA. We're only talking about Transport Sector Retirement Fund members here that are administered by SALT Employee Benefits. Even the Eastern Cape is in support of the mobile services. Noted, thank you very much. We usually send those vans out once a quarter, so we will make sure that we engage the unions for when they are in the area. What process to be done by employee to choose if wanting to opt in or opt out of new system if older than 55? The over 55s, they will get letters directly from the fund where they will be able to opt in. It will guide them in terms of how they choose to opt in or opt out. So during the month of August, we will be sending out those letters so the members can tell us whether they want to opt in or stay opted out. When you got fired, will you get UIF? Vukela, this is a Provident Fund meeting, but as far as I know, yes, when you get fired, you get UIF if you claim it. It is something that you can ask the Department of Labour, however. I'm not an expert. I see we have another hand from Sipo.
Yes. Sipo?
Yes,
there you go.
yeah, our question here is how will or how are you planning to accommodate members with pending Section 14 transfer?
Oh, that's a good question. Thank you very much for that. So we've engaged the regulator. A pending Section 14 transfer means that the member has assets in 2 funds. Both funds, both the receiving fund and the transferring fund, will be required to seed. So even the fund where you are waiting for a transfer out or for a transfer out, as long as they have the asset with them, they will be required to put up a savings spot and allow you to withdraw from the savings spot as long as that transfer isn't completed.
before you move on, does this mean that one employee may have 2 savings pot
That's
from
correct, sir.
Okay, no.
Depending on the amount of contributions, yes, the employee may have 2 savings pots with 2 different funds under 2 different administrators.
So will they not combine?
Only when the transfer is completed, sir. So remember, they will create the 2 pots in the transferring fund. And if the transfer goes through and the members haven't withdrawn, then the savings pot will be transferred to the savings pot and combined at the new fund.
Oh, that is fine.
Does that make sense?
Yes.
Okay.
We have Emily as well. Sipho,
Hi, good
do you have a
morning.
follow-up question? Okay, let's handle Emily. Hi, Emily. You can go ahead and pose your
Hi.
question.
Hi. Yes. Not so much a question. I just wanted to highlight when you said you will advise members, those over the age of 55, they will receive those notices in August. Now, you know, we're dealing with the transport industry, and some people, as been highlighted before, out in the rural areas, they might not understand what it is that they're signing away. And it's extremely important, because if they're not advised correctly, they will actually, then they might agree, and then all of their money goes maybe where they did not want it to go. And you said that they will only have a limited period. Now, when you say it will go out in August, does that mean, you earlier said that they will have a year in which to make a decision? Or
Yes,
will
ma'am.
it be once they sign in August, then it immediately will be implemented? Or are they going to be given a chance up until August of 2025 to decide what they wanted to do with their vested and non-vested monies?
So remember, the decision doesn't impact the vested and non-vested monies. Let me go back to that slide quickly. I just want to get back to that slide. The decision
now.
Yeah, you're talking to these guys, right? The over 55s.
Yes, yes.
Yes. So I just want to use the picture to explain. The decision is not about these pots here. It's about new contributions. So the vested and non-vested pots are locked as at the 31st of August. The only thing we'll take out of there is the 10% seed capital. That's what they're deciding on. They're deciding on whether they want to add these 2 pots. So all new contributions that they give to the fund, let's use the 1,500 an example for ease of reference. They're saying for all new contributions, let's say the member opts in on the 1st of March next year. Then for all new contributions from the 1st of March next year, we will take that contribution, and instead of putting it into the vested, non-vested pots over here, we'll put it into the savings and retirement pot. So 1/3 in here, 2/3 in here. Then we'll take 10% out of these and move it into the savings pot so that he has a savings balance. The option, if they don't send back a form, right, we'll continue to add all their contributions into this pot. We will not add these 2 pots for them. They will continue to contribute here. They then have 12 months to make a decision. So they can decide by the next year, August, whether they actually do want a savings and a retirement pot. Ne? But if they don't opt in, then they'll never get the savings and retirement pot. If they decide that they're opting in and they want the savings and retirement pots, then all new contributions will go into these 2 pots, and 10% of this value will move into the savings pot. But that's on their decision. They must think about it carefully, because once they opt in, all new contributions will be split between these 2 pots. They won't be contributing here anymore.
No, I fully understand that, but you see, what they might not understand is, let's say that they do not now go for the new option. They don't fill in a form, nothing. Now they just stay with the vested and the non-vested.
Yes.
One of their colleagues that work with them said, oh gosh, I've just taken some money out of my saving spot. I'm putting a deposit on a new car or whatever it's used for, and then they come along and say, but I don't have the opportunity to take some money. I'm desperate. I've also got an emergency. But they now didn't understand that they in the vested and non-vested because of their age. Look, they're nearing retirement age anyway, but it might just create a confusion. So we'll just have to make sure that those that fall within that category, that they are well educated and understand. No, I'm nearly going to retire, so it doesn't bother me. I'll stay with my vested and non-vested portfolio. And then for us as a unions, obviously, we've got a further complication in that we're sitting with members. In fact, I've got some of them present here, but it was good for them to understand as well. But they in their own company, in-house funds. But at least the principles that's been applied here and that government is instituting will apply to all. So it's not wasted them being here. But no, that's fine. But if they have, I just answered myself, and I just wanted it confirmed. So they have got a year in which they can make that decision to go into the new system or not.
That's correct.
They can go they're vested and non-vested. They obviously will automatically, from the 1st of September, some monies will go into the savings and retirement part. But the other monies will stay on the other side. So they'll actually have 4 pots.
Mm-hmm.
Am I right?
That's correct. Now, all members that were under 55 on the 1st of March will have 4 pots.
Yeah. But those that are over, that were over the age, they will end up with 4 pots. Thank you. Just a very simple question that I wanted to ask, because I don't sit on retirement funds. I'm not a fundi. What does the vested and non-vested mean? Let's say I've only got vested and non-vested at the moment, and I'm now retiring. I'm 65 years old. I'm in, let's say, Alexander Forbes Fund, and I'm saying bye-bye to the company and I'm going. What am I taking? All my money.
So if you're retiring at 65 and you have vested and non-vested, if you're non-vested, you can have your total vested pot in cash. If your non-vested pot is over 165,000, you will have to take 2/3 and buy an annuity, and 1/3 you can take in cash.
Yes, I'm answered. Thank you very much. I understood it that way, but I just wanted to make sure that I didn't misunderstand that.
Sure.
Thank you very much.
You're very welcome.
Thanks, Emily. Vusi? Vusi, if you can unmute your end, unmute from your end.
Good morning. Sorry, good afternoon. I just want to find out here because I just hear that, okay, I don't know the pot, how do you call it, but in that where you can withdraw without maybe the intervention of the company. So how do you ensure that this is the person that is withdrawing is the correct person, and then it is not a fraud if the company that you're looking for is not involved in that withdrawal? Thank you.
Thank you for your question, Vusi. As part of the application, for withdrawal, there are biometric verifications. So members have to take a selfie or do a biometric fingerprint so that we can confirm that the person is who they say they are. So we have thought about fraud prevention, and that is being catered for via biometrics.
Thank you very much.
You're welcome, sir.
Okay. Maybe we can go back to, I see Vusi's hand is up again. Hi, Vusi. Vusi?
No, my question was done, and then I'm finished with questioning. I'm switching off.
Thank you. Thank you, sir. Okay, we have Mr. Smith from MTWU. Mr.
Sure.
Smith, if you can unmute your end. Mr. Smith?
Can you guys hear me now?
Yes, we can. Thank you, sir.
Thank you very much. Thank you very much. No, I just got one request for the fund, and we would like to plead with the fund because most of the sectors which we are recently, I mean to say, which we are covering, we find that most of our members are Monday to Friday and partially Saturday workers. Now, when the fund is doing this, how can I say, the services on wheels, which means the mobile services, can we plead that that the fund be in communication with us in order for us to see how best can a jurisdiction be covered over a period of the weekend, whereby most of our members will be able to, how can I say, to have access to those services in their nearest jurisdiction. Reason being, which we are asking, I mean to say, which the submission is going towards the fund, is for the following reason. You find out, excuse me, let's say hypothetically, East London, you have we have about plus minus 10, 15 companies there, but you see the services is scheduled for a Tuesday afternoon, Wednesday morning, and you find out, Guti, those people, some of them, most of them are going out on the road as early as 4 o'clock. They're coming back at 9 o'clock at night, some of them. So the pattern repeats itself. And then you find out those people are really interested. Yes, we will be explain to them the process as it is delivered here, but some of them normally will say no, which means let me go and seek clarity for myself. So be as it may, hence we will plead that is there a probability that when the fund conduct such mobile services, to be in communication with them, with the organizations, so that we can get most of our members to get this information.
Thank you, Mr. Smith. Yes, we've confirmed that we will advise the trade unions when our mobile vans will be in the areas. That will go out in the next couple of weeks. So we will let you know when our vans will be in the areas.
I thank you very much, ma'am.
You're welcome. Bianca, I'm going to go back to the chat box quickly.
Yes, please. Yes, please.
Somebody asked for a break. Of course, you can have a break. The session is recorded, so we won't stop. But if you feel like you're going to miss anything, then you can watch the recording to catch up. If there is tax owed to SARS, will they deduct it first from withdrawal before the savings portion is paid out? How will savings be paid from the be taxed from the savings pot? So yes, Etienne, the savings will be taxed according to the marginal tax rate per the presentation. So whatever your marginal tax rate is, meaning whatever your salary is taxed at, will be the same rate of tax applied here. Number one. Number two, yes, if you owe SARS money and you're withdrawing 10,000 from the savings pot, but you owe them 10,000, they will be taking the full 10,000. So it is subject to tax directives being applied for. And if you do have outstanding IT88s, that will be deducted from the benefit. So please, that's why we said make sure your tax affairs are in order before you do your withdrawals. Please show the slide again with regards to the savings and retirement pots. It's on the screen at the moment, Gretchen. I hope that assists. Penny is asking, what is Section 14? A Section 14 transfer is when one member leaves your employer, for example, you as the employer, and they go and join. So let's say they work for Barlow Logistics and they move to Fidelity, for example. Then the transfer of the Provident Fund from Barlow to Fidelity is called the Section 14 transfer, Penny. I hope that answers your question. Will this happen automatically from 1 September or will they register? Nope. like I said earlier, they will be auto-enrolled into the two-part system. All members under 55 at 1 March 2021, whose membership has subsisted, will be auto-enrolled into the two-part system. Will the letters to opt in or out be sent directly to the member or via the employer? Nikita will probably send it to both member and employer. And where employers can assist us, we will appreciate that, but we will try and reach the members as well. So it will be sent to both. Surely the non-vested part should be transferred to the retirement part, as this non-vested part cannot be withdrawn at any point. It can be transferred to the retirement part if you like. Sorry, surely the number. Yeah, it can be transferred to the retirement part. Remember, if you terminate your employment, you can withdraw the non-vested part. The difference on the non-vested part comes in at retirement. So you do have the option still for the vested and non-vested parts. If you terminate your employment, you are able to withdraw those parts. Members that were 55 on the 1st of March and they opt out of the two-part system will they get all their monies from vested and non-vested when they retire? So again, the opt out of the two-part system, that is automatic. They don't have to opt out, they have to opt in. So the default option is to keep them out of the two-part system. For clarification, they won't be auto-enrolled into the two-part system. When they retire, the monies that they have, if they were defaulted out of it and they only have a vested part, then they are able to withdraw the full benefit in cash. If they have a non-vested part because they've moved around in industry or changed employers, then the non-vested part is subject to the 1/3, 2/3 rule, meaning they can withdraw 1/3, but 2/3 need to be utilized to buy an annuity, Michelle. Nabuso is congratulating Pussy on a good question. On the section 14 question, I think it is. How long is the Q&A going to last? I think, Cecile, until we've answered everybody's questions. But if you have got all the answers you need, then we're very happy for you to leave the session. The recording will be made available as well as the slides. What happens when my current employer dismisses me and I'm unable to find a new employer job? Will I get all my money? The vested and non-vested parts can be withdrawn. If you have a savings pot and there's a balance available, you can withdraw from the savings pot if you haven't withdrawn within that year. If the balance is under 2,000, you can take that money out when your employer dismisses you. Try not to get dismissed, but your retirement pot will stay with the fund or transferred to the new fund. So you'll get all the money that you're able to get at that point in time. Will all these withdrawals affect the third available at retirement? Yes, it will definitely affect the third available at retirement, because the more money you have available at retirement, the bigger the third is that you have available at retirement. So we are saying that from the 1st of September, it will be the two-part system that will be effective only. What is a retirement annuity? Okay, so from the 1st of September, the screen will look like this, ma'am. So if you were over 55 on the 1st of March 2021, you will have vested and non-vested parts. You will not get automatically enrolled into the savings and retirement parts. If you were under 55 and you're still a member of the fund, then you will have vested and non-vested, and we'll auto-enroll you into the savings and retirement parts. If you're a new member on the 1st of September, you will have savings and retirement parts, and you won't have vested and non-vested parts. And then retirement annuity is an annuity that pays you an amount of money at retirement, a monthly amount of money versus a capital benefit. I see we have no more hands, Bianca. I just want to check the Q&A screen and then make sure that we've covered all the questions there. We answered Madhuri, I think. No, she asked another question. The voluntary contributions we've asked. If an employee is to take another job where there is no other fund offered, can they continue to pay to this fund? So meaning if they move to an employer that's outside of the transport sector, so outside of the employer that contributes to this fund, they can't continue. Remember, this is not a retirement annuity. It's a industry fund, so you do need the employer-employee relationship. If no contributions are made, say, for 5 years before retirement, will the fund still be available when retirement age is reached, even if they are no longer a member of the fund? Yes. If there's a balance in the fund and you leave that balance in the fund and you stop contributing towards the fund, but you leave a balance in the fund, at retirement, you are welcome to come back and come and claim your benefits. So, Marjorie, I think I've answered your questions there. I want to do one last check in the chat and then see if we're done. With the member portal from the 1st of September, Karen is asking, will members be able to see in the portal the two-pot system and how much is in each pot? Yes, once we've seeded, so after the 1st of September, once we've seeded, they will be able to see the seeded balance in the savings pot. Again, on the 1st of September, there will be no balance available in the retirement pot. And for those over 55, there will be no savings and no retirement pots. If the out option happens automatically, will you be able to apply for the two-pot later on? Yes, sir. You are out here. Yes, ma'am. You have 12 months. If you're over 55 and you are defaulted to vested and non-vested, you have 12 months to opt into the two-pot system. I trust that covers all the questions, B.
Yes, correct. We have covered all the questions, Miss. Thank you, Pep, so we can go ahead and close the session.
Oh, I see we have another hand.
Oh, yes, Sipho. Sipho, I have allowed you, Mike, if you can do the same on your end.
Yes, thank you. An opportunity to pose this. It's just a concern, this one. Regarding the employee representatives, the trustees. I'm just wondering if there is any plans that you have in terms of training them, making sure that they do understand the whole process so that they can also assist on their workplaces as much as we do have representatives. Are there any plans?
Bianca, did you get the question? Oh, that's much better, Sipho. Can you please ask again?
Yeah. Yes, I'm saying, do you have any plans in terms of involving the employee representatives? I'm referring to trustees, of which we believe they can be of a very good help if they are well trained, so that they well understand the processes here. As much as we work with them and we see them on daily basis.
Sure. So you're
did you get my?
Are we going to train the employee trustees, the member trustees?
Yes, that's my my question. To say, do you have any plan on involving them?
Yes, absolutely. So they are involved. They form part of the board. They would have been part of the board that approved the rule amendment to the FSCA. We meet with the fund office next week to engage in terms of two-pot, and training is part of that engagement. So definitely we do plan for our trustees to be completely trained on two-pot.
Okay, thanks.
You're very welcome, sir. Okay, I'm going to go back for the last questions in the box, and then I think we'll close from there, right? We've done that one. Employees that are 58 currently, how will their contributions be split? They will contribute to the vested and non-vested pots. They will not be contributing to the savings and retirement pots. It will be 100% to vested. Thank you for Bianca. Could you please type out the rules of the vested and non-vested RE dates and age? Then I think it will become clear when sending out the notes. I think it's in the presentation, ma'am. It is on the slide that we have currently, and on the other slides in the presentation. So we will circulate the presentations so that you can have a look at it. The vested, non-vested, vested and non-vested. So that it is in the presentation, Lynette. I think, DPO, is there anything that you want to add to the session?
Thanks very much, Natalie and Saul, for arranging the webinar. Just a reminder to the members of the fund and union officials that we do post a lot of communication on the two-pot system on the fund's website. So just as a a reminder to themselves, they can always get into the website to read what we have posted. It's very similar to what has been presented today, but I think it will go a long way just for them to look at it again, as and when they need questions to be answered. Thank you.
Thank you, Deputy PO. Then I thank, on behalf of SALT, the board, the trustees, the Transport Sector Retirement Fund, thank you very much. Thank you to Bianca for arranging the session and all of the hard work that goes into it. Thank you to the DPO and the legal officer for joining the session today. Most importantly, thank you to our participants. Thank you for your questions. Hopefully we have shed some light on the session today. Bianca, there's a request that we send out the fund's website address. Please, can we make sure that we do that for everybody?
Yes, I've posted on the chat, but I will also put it on the thank you letters.
Perfect. Thank you very much, everybody, for your time and for your engagement today. We wish you all a great week ahead, and we hope that we see you in our next webinar. Keep well, everyone.
Right.
Thank you. Thank you from
Thank you,
Transport.
everyone.
Bye there.
Bye, everyone.